Ladies and gentlemen, good day and welcome to IIFL Capital Services Limited Q4 FY26 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to the Managing Director of IIFL Capital, R. Venkataraman. Thank you, and over to you, sir.
Thank you. Good afternoon and welcome to the Q4 FY26 analyst call of IIFL Capital. I'm accompanied with my colleague Ronak, who is our CFO. Recent geopolitical events have triggered a sharp rise in volatility. They have disrupted energy supplies. They have pushed oil prices above $100, and both these have directly impacted inflation and inflation expectations. This has resulted in increased volatility, especially in Indian capital markets, and we saw record FPI outflows in the month of March, and the trend seems to continue. Despite these measures, India shows relative resilience, and we have strong domestic institutional domestic flows, which cushioned the foreign selling. As we speak, growth outlook remains relatively strong, and I just want to give a caveat. As of now, we have to wait and watch for the monsoon progress to take a full year GDP growth estimates and call. On a lighter note, the new definition of EBITDA seems to be earnings before Iran and Trump's yearly announcement. Coming to full year numbers, our consolidated results for FY26, operational revenue for the full year stood at 2,439 crores, virtually flat on a year-on-year basis. Retail revenues for equities were 1,121 crores, which is down 9%, majorly due to the impact of regulatory changes announced by SEBI, which came into effect in the first quarter of last calendar, and hence we had the full year impact. Institutional and investment banking revenues have increased 11%, 712 crores versus 639 crores. Financial product distribution income has increased by 16%, which is now standing at almost 590 crores, close to 600 crores. Employee costs, we have seen a steep increase in employee costs to 687 crores, and that is basically a combination of both headcount, variable pay provisioning, as well as a one-time charge of 7 crores due to change in labor laws. Finance cost has increased 17% to 210 crores because of increased working capital requirements, and that is directly linked to the growth in our MTF book. Depreciation increased 20% on account of investment in branches and technology. Fees and commission expenses increased 8%. That is because of partner payout. Admin expenses are up 9% due to branding and technology. Operational PBT was down 22%, and that is basically primarily driven by increase in employee expenses. Other income was about 164 crores. That includes a gain of almost 90 crores on account of sale of real estate, which was held in IIFL Facilities, a subsidiary of the holding company. We also saw MTM due to price movement in BSE shares. Coming to quarter 4 FY26 versus quarter 4 FY25, which is a quarter-on-quarter, year-on-year for the last quarter number. Operational revenues was 644 crores versus 537 crores, up 20%. Retail revenues was up 22% at 298 crores. Institutional and IB revenues was about 162 crores versus 97 crores, and primarily because of both increase in investment banking as well as broking income. SPD income was 182 crores, which is down 4% because last quarter in Q4 FY25 we had increased brokerage due to certain transactions on NSE shares. Employee cost increased 12% to 183 crores, again because of headcount increase and variable pay increases. Finance cost increased 45%, steep increase to 63 crores because of MTF book increase. Depreciation was up 6%, and because of commissioning of a new branch. and again, technology costs have gone up. Fees and commission expenses are increased by 40% because of sub-record payouts. And admin expenses was 8% increase, again, due to branding and marketing expenses. Operational PBT before NTM changes was up 14% in last on a year-on basis. If you compare quarter-on-quarter, which is Q4 FY26 versus Q3 FY26, operational revenue was up 10%. Retail revenues was up 3%, which is virtually flat. Including institutional broking was virtually flat at about 160 and 162 crores, which is virtually unchanged. FPD increase was up 36%, 182 crores. Employee cost was flat, roughly increase of 4%, 183 versus 175. Finance cost again increased 18% because of growth in MTF book and working capital requirement. Flat depreciation, fees and commission expenses increased because of higher sub-broker payout. Admin expense reduced to 86 crores, and operational PBT again was up 21% on a quarter-on-quarter basis. Now coming to some housekeeping numbers. Average daily turnover was about 3,22,886 crores, which is roughly 3,20,000 crores in F&O, and cash was 2,875 crores, and which was 3,14,660 crores in Q3. Again, a split of 3,11,000 crores, roughly 12,000 crores in F&O, and cash was about 2,685 crores, and which is basically 3% growth, or which is virtually flat. We also, as I mentioned earlier, we have also started getting into manufacturing. We closed our first capital credit opportunities fund. We raised about 500 crores, and this is basically a risk-adjusted high yield kind of fund. Coming to income tax notices, I just wanted to give all of you a heads up. The Income Tax Department has conducted a search under Section 132 of the Income Tax Act, and certain basically what had happened was, I think we also from our own side, because of the block assessment, we had ad hoc amount of 27 crores approximately was paid in last quarter. Now what has happened is that we have got a notice which for both IIFL management and IIFL facilities for roughly about 56 crores combined for the block period from April 1, 2018 to February 3, 2025. The respective companies are in the process of filing appeal against the said order. In case of the holding company, the assessment proceedings are still in progress, and we have not got any orders or demand notice till date. We believe, after considering all available facts and records and also consulting with advisors, there won't be any material adverse impact on the financial position of the group, and hence we have not made any adjustments. With this, I come to the end of my talk. Thank you so much, and we are open to answer any questions that you may have.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. First question is from the line of Keshav Karwa from White Pine Investment. Please go ahead.
Thank you for the opportunity. I had 2-3 questions. One is on the underlying growth for FPD AUM, which looks strong, and what is driving this growth?
See, we have seen a growth in our FPD assets because it was about 31,000 crores and it has now become about 52,000 crores. And we have seen all-round growth both in mutual fund and other assets also, and including fixed income assets.
So
because if you see, mutual fund assets have grown from 14,000 to about close to 21,000 crores. So I think basically all products, AIF, PMS, mutual funds, and also fixed income products have seen some growth.
Okay, sir. So my second question was, could you please provide how many RMs we have had this quarter and overall RM count in FY26? And incrementally, how many RMs do you plan on adding for FY27? And any AUM target for FY27?
See, we have currently about 50 wealth RMs, and we are close to about 300 odd, 350 odd, 300, no? We have about 300 old that affluent or PCG broking RMs. Our focus is that we should increase the headcount for wealth RMs this year. I don't have a specific number in mind, but we hope, because last year has been increasing. Last year had been a difficult year for recruitment, but our aim is to add to our wealth the cohort of wealth RMs. And coming to asset growth, I think we are close to about 52,000 crores, and I don't have a number in mind, but we have to increase it.
Okay, so my third was that we have seen a sequential decline in the MTF book. What led to the decline, and going forward, how are you planning to improve the book? Also, could you please provide me the breakup for institutional equities and investment banking revenues for this quarter?
See, the basic broad reason for the decline of the MTF book is primarily because of the last quarter increased market volatility in the last quarter, due to which MTF impact was also there. And coming to the other question about institutional broking, investment banking, roughly, I'm giving you a rough number. Roughly, this is about 700 crores is there, and out of which roughly it will be about 450 and 250, a split between broking and banking.
Okay, sir. And sir, you are doing a fundraiser.
I'm giving broad approximate. So there might be 10 crores up and here and there, but broadly.
Okay. Okay, sir. So you are doing a fundraise. So can you throw some light on your plans to use those funds?
See, actually, at this point in time, I just want to say that as a company, the board continuously evaluates opportunities to enhance shareholder value, whether it's in terms of potential acquisition, new projects, and other such and combinations. So at this point in time, I can't share more with you because there's no event that requires disclosure in the SEBI LODR regulations. As and when we have something very definitive, we will make all appropriate disclosures to the stock exchange as per regulatory guidelines.
Okay, sir. Thank you so much.
Thank you so much.
Thank you. Next question is from the line of Prayesh Jain from Motilal Oswal. Please go ahead.
Yeah, hi, sir. Sir, first.
Good afternoon, Prayesh. How are you?
I'm very good, sir. How are you?
All well.
So just, there is this RBI regulations getting implemented from 1st of July, right? What do you see the impact of that on your broking business in any form? And also, if you could throw some light, if not so much for us, what would be the kind of impact for the industry per se?
See, actually, you know what? My view is that there will be a short-term impact for sure because of increased working capital requirements and margin requirements. And then over a period of time, the market finds its own level and goes back to that trend. So short-term impact will be there for sure. For us also, there will be marginal impact because we don't do prop trading ourselves, so there is no impact. And so for clients, the clients will have to, I would say the cost of overall trade in F&O will increase.
Okay, got that. And secondly, sir, from 1st of April, again, there are on the institutional equity side, there has been a reset of yields that has come in because of the SEBI regulations. So what kind of impact do you see on your realizations on the institutional equity side?
See, actually, you're talking about the domestic mutual fund yields, right?
Yeah.
So my opinion is that our opinion or our learning is that the impact will be marginal because already effective yield was plus minus the yield as suggested by the regulator.
Okay, got that. And secondly, sir, when you kind of give that distribution assets is about 52,000 odd crores, this would include all your customer base today, but would it be appropriate to kind of segregate this into the ultra HNI wealth management that you would be setting up and you are in process of setting up? What would be kind of AUM that you would have got from those kind of
See,
customers?
to answer your question about the HNI segment, which is the new channel which we have set up, so roughly that will be roughly about 12,000 crores, if my memory is correct.
Okay. Got it. And the product mix would be similar to what you have shared?
Similar.
Would be
Similar.
Got that. Got it. Thank you. I'll come back in the queue if I have more questions. Thanks.
Thank you.
Thank you. Next question is from the line of Neha R from Abacus Asset Managers. Please go ahead.
Thank you for the opportunity. So my question is on the MTF income. So out of the FY26 income of 439 crores, can you give a split of how much of that is the interest on the MTF book and how much is the interest on deposits with banks?
See, roughly it will be more roughly 50-50. 50 is 50% MTF and 50% is from whatever the exchange deposits.
Okay. And so last year our net interest margin almost seemed to about 18-19%. So what sort of yield do we expect to make on a sustainable basis? I mean, how do we see that going, the net interest margin?
Can you repeat the question, please? Your voice is not clear. You're talking about net interest margin?
Yes, the net interest margin, I think last year in 25, the total net interest margin for 25 was about 18-19%. So is it lower this year, and how do we see that going on a sustainable basis? What sort of margins are we expecting to do on a sustainable basis?
Net interest margin 18-19%. I think the interest spread will be, net interest spread is roughly about 4%. 4 to 5%.
So it's 173 crores of interest on the MTF done last year
last year was 200 plus, I thought. Okay, you're trying to deduct interest cost from interest expense.
No. So I was talking about the interest on the MTF, on the margin book, which is about 173 crores. So this is part of the 419 crores of total interest which we did last year.
Last year we had approximately 420 crores of income, and the MTF book interest was slightly higher. It will be about 160 types. And the interest expense we paid out was about 180 crores.
Okay.
But this interest is very difficult to attribute how much of that is attributable to MTF and how much to other things. That's the reason I'm not able to give a precise answer to how much of this is interest and how much of that is non-interest.
Okay. So just lastly on the distribution income, so our assets have grown, but the income has grown relatively higher to 182 crores for the quarter. So is it largely insurance-related revenues or any other products that have also contributed? Because the AUM mix largely remains the same for us. So what exactly has led to this jump on the...
So basically, there's some component from insurance, some component because of placement of NCDs and fixed income. So that's the reason why we had a disproportionate increase in last quarter.
Got it, sir. Thank you. That's it from my side.
Thank you so much. Thank you. Actually, maybe we should meet face to face. So then I'll be able to answer your other question on interest correctly, because I'm not able to hear you. Or maybe it's better if we meet and clarify.
Sure. I'll connect with you. That's helpful. I'll definitely connect with you for this.
Thank you so much.
Thank you.
Thank you. Next question is from the line of Apeksha Bajaj from AV FinCorp Private Limited. Please go ahead.
Yeah, hi. Thank you for the opportunity. Any color on further acquisition by Fairfax? There was a news around that it is going to increase stake by 10%.
I can't offer any comments on this.
Thank you.
So as and when there is something definitive, we'll surely make appropriate disclosures as per listing guidelines to the exchanges.
Okay. Yeah. Thank you.
Thank you.
Thank you. Next question is from the line of Abhijit Sakhare from Kotak Securities. Please go ahead.
Good afternoon, sir. Thanks for taking my question. Sir, a slightly hypothetical question. Looking at our net worth of close to 3,000 crores, how do you see it in terms of, supporting our growth ambitions over the next 3 years on the broking side and potentially on the wealth management side as well?
See, we think that we are well capitalized and we have enough dry power to grow. I don't know how to answer your question. Because we are profitable. Last 3 years, if you see, last 4 years, I think our net worth has gone from about 1,000 crores to 3,000 plus crores, and basically all of it from internal accruals. I think we are running a profitable franchise, and we have enough. All the cash is being used to reinvest in the business. So we think that we have enough ammunition to grow.
Understood, sir. Sir, initially you had given a comment around the in terms of the breakup between IB and IE revenues. That was, I think, close to about 700 crore. That was for the full year FY26, right? I'm just reconfirming that number.
Yes, it was correct. The full year revenue was about 712 crores.
Understood. Okay, that makes sense. Got it, sir. That will be all. Thank you so much.
Thank you so much.
Thank you. Next question is from the line of Prayesh Jain from Motilal Oswal. Please go ahead.
Yeah, so just an extension of the previous question, the current net worth of 3,000 odd crores, how is that utilized across, say, broking, wealth management, and alternates that you're setting up that would also need seed funds. So how has been the utilization of this net worth currently across the business lines?
Actually, the bulk of the business has been put in broking, MTF, and exchange margin. So that has been a big allocation of capital.
So, with this current net worth and say the borrowing limits that we can still have, do you think that we have enough capital or headroom to grow another 20% in the next couple of years, or we would need more capital?
So I think we have enough to grow in the next by 20% in the next.
Got that. And sir, with respect to any plans on new other categories like full-fledged AMC or any plans there? Any thoughts with respect to new product categories that we want to get onto?
I think as of now, we think that we have all the elements that can help us to succeed in our businesses, which is investment banking, insurance, equities, and I would say wealth management. As you know, in the slide also, we have said that we have started manufacturing, in-house manufacturing, both on the PMS platform and the AIF platform, including early stage, late stage, as well as a credit fund. We will evaluate opportunities to enhance shareholder value and improve our competitive positioning. So as and when something happens, we'll make all the necessary disclosures.
Got that, sir. Thank you.
Thank you so much.
Thank you. A reminder to all the participants, anyone who wishes to ask a question, please press star and 1. Participants, you may please press star and 1 to ask a question.
For joining us on the call, thank you so much. And should you have any further questions, please feel free to reach out to either me or Ronak, and we'll be more than glad to answer all your questions. Thank you so much, and have a nice day.
Thank you very much. On behalf of IIFL Capital Services Limited, that concludes this conference. Thank you all for joining us today, and you may now disconnect your lines.
Thank you.